The following presentation has been prepared by the Video Tax News team for Canadian tax and financial professionals. Program recorded April 22nd, 2026. Enjoy.
Welcome to the May edition of Life in the Tax Lane. Happy to see and hear you too, Hugh and Joe. Let's get rocking and rolling.
Well, April's done. Did anything happen while I was offline for tax season?
I think so. There were a few things. So why don't we jump into that? We'll kind of come out for air. Let's talk about some of the new things. The first thing I wanted to mention is that Canada Groceries and Essentials Benefit, there's that new benefit, and well, it's kind of a modified version of the old GST HST credit. But regardless, that one-time top-up payment, we've got an announcement for the date. So June 5th is when it's supposed to be paid out. Now, those quarterly enhancements or enhancements to the quarterly amounts, when does that start? July 3rd, 2026.
All right. Next item we wanted to hit. We just finished personal tax season. Maybe you, your clients went to the bank to make that tax payment. Well, guess what? The ability to make tax payments while talking to the teller and asking them how their day went, that is going to be no longer possible as of December 1, 2026. Financial institutions can no longer accept these paper-based remittances for bill payments. Now, this is not a CRA mandated change. This is actually a change coming out of Payment Canada's bill payment framework. And this is the organization that manages Canada's payment clearing and settlement infrastructure. So as of now, as of shoot, we haven't seen comments on CRA's webpage about the changes in how we can make our tax payments at the bank. So we're keeping an eye on that, but we have started to notice changes in actually one of the provinces, Alberta, where they have started to address this issue. Get ready for it. It's going to be a change for some of our clients next personal tax season for sure.
Probably don't want to figure this out at the bank on the 30th of April next year. Well, Joe, you mentioned the groceries benefit finally getting worked on because it's finally passed into law. And we've seen a lot of stuff recently get passed into law, not all of which got passed before it's legally effective. We've got a lot of retroactive things out there like new AMT rules that not only applied for 2025, but also 2024. So if I've got something like that impacted my tax return, or I just realized I made a mistake on last year's tax return, do I have to fix it? We've got a link to an article from the Canadian Tax Foundation's Tax for the Owner Manager publication. The author graciously posted that online in the public domain on that very question. And they go through and note that although obviously the government would like you to fix it, you have no legally imposed obligation to do so. You were required to do your best to get it right up front. If CRA finds it, they can certainly reassess and maybe want to get ahead of it and avoid interest charges mounting even higher. But legally, we're not aware of any even past legislation that said you're required to fix for this retroactive change. So ultimately, the choice comes down to the taxpayer, their conscience, and I, as their tax advisor, certainly don't have the right to modify their return without their consent. Joe, what if I decide I do want to fix that past error?
Well, then the Voluntary Disclosure Program might be the thing for you, Hugh. Is there something you want to tell us about? No. Anyways, let's just talk about voluntary disclosure in general. The first thing is we had a recent case here, very interesting. So we had the parents who owned an investment corporation. They passed away. The accountants stopped filing returns at that point. It went into the hands of the kids, and about a decade later, they realized, geez, we haven't filed returns for this thing for 10 years. What are we going to do? So they went out, got another accountant, got things started, or got them to start preparing all the returns, that kind of thing. And right about the same time, or just slightly after, CRA started asking for information. They started, first of all, requesting that the taxpayer file its return for the 2017 year. Then they called the accountant a little bit later saying, hey, where's this return? What's going on? And then another month later, they actually demanded that the taxpayer file the return. They did. They got it filed a couple months after that, but they tried to submit it through the Voluntary Disclosure Program. And the VDP basically rejected it and says, we're not going to accept it into our program. So that's what's now being challenged in the court. Well, the judge basically said CRA's decision was reasonable. This wasn't truly voluntary. Look at all this communications. Now, I've got to say, there's a new version of the program which started in October of 2025. And CRA has provided some comments. And one of the comments was that if you have a demand to file, we still may accept it under the prompted relief stream. Now, I think the thing is, in this situation, first of all, those new rules wouldn't apply to this one because it was submitted before that date. But if something like this happened nowadays, would you be okay? And I don't know if you would be, because it wasn't just a demand to file. There were those other communications that had happened as well. So would it be voluntary? Probably not. Just something to be aware of.
Joe, I kind of eyeball that and say, if I ask for voluntary disclosure protection, maybe I get it, maybe I don't. If I just fire the returns off normally, I'm not getting any relief.
There you go.
Next item we wanted to hit, okay, you filed your tax return under the regular system. CRA has denied some credits, some deductions, whatever the case may be. You don't agree with CRA, so you want to dispute that denial. So what do? Well, you do have the opportunity to file an objection with the CRA. Now, the key thing to remember here is if you want to file that objection, if you want to use those dispute rights, the deadlines for getting that objection in the deadline is very tight. So for example, as an individual, you have the later of 90 days after the date of the assessment, or if later, 1 year after the filing deadline or the due date for that relevant tax return. So what happens if, for whatever reason, we didn't get that objection in time? Maybe we didn't get our ducks in a row. We didn't realize there was an issue. We passed the deadline. Are we done? Well, there is an opportunity, a possibility where you can ask CRA for an extension, a 1-year essential extension to get that objection in. So it is out there, but it is critically important that if you pass that deadline, you don't just file an objection, say, I hope it happens. Be clear as to whether you are asking for that extension. Now, there are other considerations that CRA will factor in when determining whether to grant you that extension. Did you have that bona fide reason to object on a timely manner? Why were you not able to object in a timely manner? So it's not guaranteed, but it does provide you another potential option.
Kate, I always look at these from two vantage points. One is, don't let the 90-day period pass. Don't keep discussing with CRA and let your appeal rights potentially expire. But don't give up because it's day 91. CRA very typically does accept these. And where we're starting to see it now is people that didn't realize they'd moved to online mail, so they didn't even find out they'd been reassessed until over 90 days. Fingers crossed, CRA is going to be reasonable, and the limited ones I've seen to date, they've accepted the late objections. Whether we win the objection or not is another question entirely. Well, maybe you're not dealing with the Canadian system. Maybe you're dealing with the U.S. citizen because you're a U.S. citizen. And maybe you even explored the possibility of handing back that citizenship, renouncing, only to discover that that'll be $2,350 American dollars, please. Holy cow. To not be a citizen? Sounds a little steep. Well, apparently the State Department agrees. They have come out and said effective last month, April 13, we're dropping that price to only $450. So over 80% off. Now's your chance. Get in before they change their mind if you wanted to get rid of your U.S. citizenship.
Well, let's shift gears a little bit here. Let's just talk about whether a business exists. So we had an individual here, a scientist, who had started a company, and the beginning stage required quite a bit of research and development. So a lot of costs incurred, but no real revenue coming in for the first few years. So the question was, did a business exist right at that starting point so you could get deductions for all of these expenditures and also claim SR&ED credits? We have a court case, and you can take a look at the link below the video here, which said, yeah, there actually is a possibility. So if you want to explore that a little bit more, definitely check it out.
Awesome. Final thing here. Someone, a corporation, an entity, they ask you to be a director of the organization. Do you say yes? You got to make sure you yeah, exactly. You got to make sure you understand the liability, because you as a director can be personally held liable for that entity's failure to remit source deductions, GST, QST, as the case may be. And CRA can go after any of the directors. Biggest pockets, that's going to attract CRA's attention. That's all for this month. Have a great one.
The Video Tax News team has been providing Canadian accounting professionals with practical tax information for over 40 years. Subscribe to one of our tax newsletters or join us as we present live and pre-recorded seminars relating to both personal and corporate tax. For more information, go to videotax.com. The preceding information is for general informational purposes only and deals with dynamic, time-sensitive, and complex matters that may not apply to particular facts and circumstances. The information provided should not be relied upon as a substitute for specialized professional advice in connection with any particular matter. For more information, go to videotax.com/disclaimer. Copyright Video Tax News Inc. 2026. All rights reserved.